Hey everyone, welcome to your daily update for Sol and BTC. So yesterday we had a few sort of sneaky bullish closes. Sol crept up over a couple of lower, when I say lower time frames, sort of like daily levels, and yeah, we've had a wee bit of a bounce. New York came along, did the typical sweep to the downside, sweep to the upside type thing, take out that high leverage liquidity, and then we've just sort of been grinding up, and yeah, here we are now. So there's a couple of key levels that we want to try and close over today if we can, and might get some continuation. Important thing that has been happening over the last sort of 3 to 4 days is BTC has actually been pulling up and opening new candles outside of some of the higher time frame hold levels. So probability of longs completing now is just getting bigger and bigger and bigger. And it doesn't actually look as good though when you look at Sol. So I think it's probably fair to say that whatever the next top on Sol is going to be is pretty much just going to be lined up with when BTC stops grinding to the upside. I'd be very careful around that 89 price point, 89, 89.5 on Sol as well, just because there is a very large time frame resistance which has popped up in the last 4 days. And yeah, that could be it. So we'll see. Let's have a look at these charts and see what they have to say. So firstly, Sol BTC on the daily, it's not a bad place for that candle to be. So it's come up, it's tested the greedy part of the daily hold, so up inside the body, it's had its typical little rejection that you get off that, which is this fib here. As you can see, we're just sitting around that 1618 now. But it is sort of holding this strength level. So if it stays here, next candle can open over the top side of the trend and potentially have a bounce. It's also after sort of completing that swing dip, if that's probably the easiest way. I probably do need to do a little bit of a video on this, but so this wick to wick type fib, this is a range versus this is a minimum obligation hold if you go back to the actual body here, so body wick. So with ranges can just continue. So they can actually be created where this blue candle comes all the way down, closes under the bottom. That's like super bearish, and then rejects off the bottom and then keeps on going down. Right, so that's say one extreme. And they can be created sort of like what you see here, where the candle closes just inside this area and then comes down and hits the second level, but does fail to close under it. So at the moment, it looks like the distribution or the shift in strength is reversing. If it opens up over the top side of this and over the top of that 12405, then we might see a little bit more bullish action come into Sol, which at the moment it is definitely lagging a wee bit behind BTC. When you look at the lower time frame movement, you can see that actually you can't see because it's on my other screen. But yeah, when you look at the lower time frame movement, you can sort of see the sideways price action on BTC, which equates to downwards price action on Sol. So that's the kind of thing you look at when you're looking for strength differences. So yeah, not a bad place to open. If they push it down below the 12405, then and particularly if it ends up under the trend, so say an area like 12365, then that would mean it's been positioned under resistance and more likely to continue down. Just the other little slightly bullish thing here is that we may get a new origin just forming here at the break. So at the moment, this 12230 is a daily break level, but we didn't distribute back to that. So yeah, if we get over the top of the trend, and even if there's a bit of a wick to the downside, particularly if it happens earlier in the day, which is usually pretty scammy if they do it straight away, but if we have that sort of wick down, maybe tap that origin level and then shoot off to the upside. And the other thing to look forward into the future now is whatever the next distribution candle is that closes on the daily, so the next down day, whether it's tomorrow, the next day, the day after, if there is a down day, if it then gets fully engulfed, then it can be creating a range off this new daily origin down here. So just keep that in mind. It could also do it based on something like a 3 or a 4 day, because you've got say 1, 2, 3 candles in here, 1, 2 here. So if this next one goes up and has a decent move up to these trends, it could be engulfing these as a 3-day candle, in which case you'd have to look at a different time frame chart to see what the next target's going to be, but we can deal with that if we get that. Right, let's have a look at the safety assets. Okay, so safety assets on the daily, we haven't hit the break up there at 70%, so that now means we've got an origin rejection, creation of a break. It's not really a full engulfment here, but it was an engulfment, so it was a hold level. We created a trend. The trend has kept rejecting. We've had a couple of attempts to break the trend, but we haven't managed to do so. So really we're looking to see, does this just pull back a tiny bit more? So where it currently is, it's still a little bit bullish because it could open over the top side of the trend, and it's still over the top of the range trend. And it's really just hugging that line. So we're currently at about 70.02%, and you'd want to see it just pull back more to sort of about even just 70, or 69 point anything, and that would actually put it down underneath the trend. And of course, if it comes any lower than that and actually creates a downside engulfment, then that's even better. The lower it goes, the better, really. So yeah, we might be looking at a wee bit of a strength shift or something that causes a wee bit of a pop in risk assets. But like I said right in the very beginning, just be careful about this 89.5-ish area up here. Not only is it sort of where the low time frame liquidity kind of runs out, and pretty much on par with what you're seeing here, just in the higher time frame or mid time frame liquidity. It's not really high time frame liquidity, but it's also where we've got that really large rejection structure has closed in the last 4 days. So okay, let's have a look at the totals. So totals including BTC, we are still maintaining that bounce off that older origin there at 1.96. We're still above trend. Looks like we might do another break of the downtrend. So we're actually starting to cycle through breaks on the downtrend. So this is the kind of thing you do see before a reversal. Typically, say on a daily structure, you might do 5 to 6 breaks of the initial downtrend, and then you might start to see the uptrend start to form. So it's looking positive from that perspective. The only thing that would make this even more positive would be if we actually got a close over that 2.03 level today, because this engulfed candle here could be the actual range to move up, which it's got all the criteria. It's bounced off an origin, it's fully engulfed. We've moved between the 1 and the 1.618 levels. It was a little weird the other day when it didn't come back up here, so it bounced up, came down, hit 2.03, didn't quite get to 2.09, so that was a little weird. It did form an origin up here at 2.12, and then we've come back down, we've tapped the origin, we've got a break level in the middle here at 2.06. So it wouldn't surprise me if we got all the way back up here and actually tested this new origin based off where we are now, and the fact we're bouncing off that 1.96 origin. The other thing would be it does a bit of a short stop, rejects off 2.06, creates an origin in the middle there, and then that's more or less like what that's telling us is that this is the broader range, which is 1.96 to 2.12. But if it creates an origin here in the middle, then what it's sort of saying is that the broader range is failing, and the overall market cap is kind of stuck in the middle. So it will be definitely worth seeing what happens in regards to that level. Yeah, so could be a little bit more bullish if it goes over 2.03, and even if it doesn't, it's a little bit, I mean, it's doing a trend break. It's probably going to want to target that break anyway, so it's just, does it do it from a position of strength where it's actually attacking resistance from above support, or does it do it from a position where it's a bit below this resistance, and then it goes and attacks some higher resistance because of the trend break, and then potentially has a pullback down again afterwards. Right. Yeah, let's have a look at the riskier versions of our totals. Okay, so they've definitely shown this weakness over the same sort of few days, but that looks to be like it might change today. So we might bounce, or we might close above 664.73. Now, if we do close above 664.73, then we have possibility of creating a new range to the upside. There's definitely more resistance on this, so we're still below range trends. We may close under 664.73 and then not even create the range. We will create a hold, and the hold's going to assist in breaking future trends. But yeah, if this was to have a decent little move up before the end of the day, it could become very positive, like some kind of close over the range trend, some full engulfment of this prior candle. It's a bit delayed, but we did bounce off that origin level there at 635, and then we did do 3 engulfed 3, so yeah, it's looking like it could get a little bit more bullish if it has a decent close. It can't really be immediately bearish unless it has a big pullback before the end of the day, because at this stage it looks like it's above all the trends. It's got the hold. Doesn't really. It would take a pretty decent bearish sell down in the next 1 hour and 30 minutes to make that bearish. It's either just kind of neutral because it's in between the trends and maybe doesn't engulf the candle, or it's bullish. One way or the other. Right, so look at Sol. Yeah, so the 15-minute structure, it's just toying with the trends at the moment. It's got this origin level in here, which it's had its first bounce off. So you can, one of the key things, just if you're new to these videos, one of the key things about price structure is it's all fractal. So what you're looking at here. We talked about this in the Discord the other day, but this is an in-range origin. So effectively, you've got the lowest point of any range, which is the break level of a range, should be the bottom of the first accumulation candle, in this case for a long range. So it becomes like, say, this little wick down here at 82,750, and then no other candle in that range in the future should actually go below that. Right? So it should be the lowest point is the break level. So origin levels are created when break levels get hit, and then price doesn't break the range, because if you hit the lowest point of accumulation, and so the greediest point of accumulation, then effectively if you break that, then well, you should just continue distribution because the buying pressure is not there anymore. Whatever caused the market to move up is gone. So the funny thing is, if you actually get a second shot at it, like this candle here, where you actually have this low point, then you come down below it in the next one and then go up again, that actually creates, so this is what's called a range hit. So a range hit origin, where it was actually created inside the range and before the range even really existed. So then when it gets hit the second time, which is this candle down here, it creates that bounce which goes up to try and break the hold, which was up here. And if there wasn't a hold there, then the bounce would have been bigger. So if you see this kind of thing on on a 4-hour chart, obviously it could be a bigger move depending on how much movement's been in the prior candles. If you see it on a daily, it's good. Obviously, if you see it on a weekly, then it's going to be even bigger. So just keep an eye out for that structure. But one of the things to be very careful of is that this is already the creation of the origin. So this is the first touch. If you're going to take a high probability trade, it's this touch. It is not this touch. So this is the second touch of that origin. It wasn't created by these two candles, like if this wick was higher than this wick, it was created back here. So just keep an eye on that if you are trading origin level bounces and scalping. Right, so we didn't engulf, but we did get above the trend. We're below the support trend. So what have we got? An hour and 32 minutes to go. Could we get a decent sort of close out of here? It is possible. We just need consistent bullish low time frame price action to basically get above this range trend and then get above the break level and so on and so forth if we want to have a decent move up before close. But there is enough time. Let's see what the hourly has to say about that. So this is the hourly range that we created on Thursday, and we closed just above it, maintained just above it, and then this is the range I've just been scalping on, basically. So we've hit level 2 now. We haven't quite closed above level 2. So if this hourly candle can get back up above 84.644, then the next one could have a crack at giving us a bit more of a decent close. But it is under the trend, it is under the level currently, so you wouldn't really expect a huge push up before the end of the day. If we do get this over the 84644 and over these break levels, and then the next one hard closes before the end of the day, then maybe look at that 86.349 and 88 as the next two levels in the hourly range. Looking at the 4-hour, so that's an example of an in-range origin, and it nearly got to it and then did a bit of a rejection. So I mentioned a couple of days ago, we're seeing a lot of this kind of stuff recently where we almost get to targets and then don't quite. So we do have another origin down here which was formed in the creation of this range, so we can also look to these as our levels. So hard close above the 84, 85.373 and then 87.433 would be the 4-hour levels there. And I'd just be a bit sus about the way this candle closes. If it does close down, then they might then just poke up, hit these resistance levels, and then have a rejection back down. And it's also entirely possible that when we hit that 85.5, we have an initial sort of pullback down here to the hold at 81, or even back down to the origin around 80. So don't be surprised if they do a bit of a flush type dump. Seems possible. And of course, you can start to put your bullish caps back on if it gets up above these levels and closes out the day. So any kind of close above 85.7, 86, something like that, could be seen as quite bullish. And if it has a decent couple of dollar move to the upside and closes above these 86 levels, then even more so, because that's more or less the top of this whole 4-hour range at the moment. Okay, daily. Scroll. And I don't think we've hit the body of the daily hold yet. No. And we haven't quite hit the 85.694, which is the first level of the daily range. And then we've got that, like I mentioned before, that origin up there at 89, which is actually greater than a 1 day because you got multiple candles in here. So I think we looked at this recently. It's a pure 2-day origin, which is potentially going to give us a bit of a smack, but it's also a hold just above here. There is a hold, and it's a big one. I'll just see if I can find it. Okay, here it is. So it's a 693-day hold, sitting there at 89.576, and it was validated on the 16th of the 2nd, so it's quite new. Now, there are lots of refined levels inside of it, so if you work back on the charts, if you look back to refining hold levels, I think there's an educational video on that, but if you're unsure, basically there is a method at which you can refine hold levels back to their greediest points. If you'd refine things like the $150 hold levels on Sol, you would have ended up at $253.30 roughly, and of course by the time we got to $253.30, everyone's pretty bullish, and then the next thing you know, you're down at $70. So this is the same type of structure. It starts at 89. The most refined level, if you work your way back through it, is about 211. There is actually a couple of levels higher than that. There's one at 230 something and one at 244, which is the highest level, but it doesn't quite work as far as the rules around refining levels, because they've got to be each one is basically the parent of the next one, so it's like parent child, parent child, parent child, and then when you hit the top, if you get to the top, because you don't always get to the top, then it would end up trying to push back down to the bottom. So that could mean maybe price could go up to the 200s before it comes down to $15, but at the same time it could just hit 89 and then want to go on a trip down to 15. So if we hit 89, start rejecting, and then news and tweets and stuff start coming out about wars or whatever, just bear in mind that structure is always there, and then the accelerator pedal as to how hard or how fast it goes is usually attachable news. So just we have that sitting there waiting. So we'll see. Once we're past that level, we are in a level where we basically anything up from that is pushing into really high time frame resistance. Okay, so some of the high time frame levels just to watch out for that we've got closing today. So we've got 51D, which is it's tough, this one. So it's closing above the 78 and 79 levels, which is obviously good. But we are below resistance in a couple different forms that exist here, confluent with around 90. So, if we would head back up, we've got resistance basically sitting from about, we've actually got resistance sitting from about 84, which was just sort of bouncing around at the moment. We want to be over 84.6, definitely. It's always just on the level, isn't it? So this is one of the more current ranges as well. So it's just kind of on that level. So we want to close ideally above 84.6. Below that could mean straight rejection down, and it's actually completely below the bottom of a whole distribution range if that happens. But you can't fade this really old hold level that we've actually fallen back inside of as well. So this would be your 90.6 area. We've also got 90.4, which would be the a range level that it could pop up to hit and reject. And all of these things could actually bring it all the way back down to 80, 79, 78 again. So it's a little bit bullish that we're closing up inside the break level. It's a pure break level, so it's only 2 candles, so that's good, a great place to be. But being below 90, when the range obligation for this really old 2022 structure is to bring it back down to 58, that's still pretty bearish. So and we're in a whole different world if we end up down at 58. As you can see, there's a lot of numbers there on the sides, which you could be down there for quite a while, stuck in amongst all these various different range levels. So that's one of the closes today. And I think it's just more confluence to be careful around that 89 level if price starts to pump up towards that and then starts to show any kinds of weakness afterwards. All right, 17-day. And so we have a break level that is sitting at about 93, which we haven't managed to get back up above. We've also got a reverse hold. So these can be a little bit nasty if you close under reverse holds. And that's sitting at about 90.0. So yeah, that's not great. And we're also sitting smack in the middle of two range levels. So one of them is surprise, surprise, 85.4. And then just underneath, you've got about 84. So it sort of shows why we're just bouncing between 84 and 85 at the moment. So closing under 84, you could pretty much say is just adding another layer of bearishness. Closing above 85.5, a little bit better as far as a movement to the upside goes. But yeah, it's not a very good looking candle, to be fair. It's definitely falling back inside these older ranges. And you can see, if you look back here in March 2022, then you come all the way across here, when we closed under this level the last time, so 17 days ago, it was just tiny bit under the level, rejects off the really old range level from 2022. And then if you look at what it went and hit, so you scroll down here to the next range level, there you go. There's your 69, 70-ish type price point, 69 price point. So we basically just fell back into a really old range from 2022, rejected where you'd expect your rejection and headed straight to the next level where we have bounced. But we're not closing back up inside that level. So, for this to even become bullish, even on a 17-day time frame, which is not a huge time frame, but for it to become bullish, it really has to engulf. We need continuous upside moves that get above. In this case, it would have to actually recover 99 pretty much within the next 17 days for this to really be any kind of bullish reversal. So, and looking at the 3-day close, well, I think we're down inside a heap of different levels here. The 3-day is a absolute bird's nest of support and resistance. So at the moment, it's looking a little bit more on the bearish side, so it's still below the break. And really, you'd want this to close up over 85.027 today, just to get that back on the right track. Yeah, that's not the most bullish. This is just Sol at the moment, though. Maybe because we've got that, if we do get a decent break on Sol BTC, we might actually start to flip this thing and it might start to look a little bit better in the coming days. But as it stands, it's closing inside, hard closing inside if this is a blue candle, which means any kind of close under 85 basically, then this becomes a hard close inside of a 3-day hold, which puts more resistance, emphasis on price points like 86 and 88. So yeah, if it keeps traveling up, resistance at 86, 88, high time frame resistance kicking in at 89, it's just not looking great. Okay, let's see what's happening in the land of smoke and mirrors. So these are the ones you can't see on TradingView. Just wait for that to update. So working on this new software, it's pretty damn awesome, but as you can see, it finds so many levels. It can take a little bit of time to refresh sometimes when you're dealing with one day stuff. So I have to figure out a way to make that faster. Yeah. There's a thing up in here for performance where you can actually limit the amount of levels it shows in proximity to price, which I probably should have done before I actually consciously flipped over to a level that I knew would have way too many levels on it, or a time frame that would have way too many levels. Just pause this and let it update. Right. Okay. So what do we got? So a similar sort of thing. If you look back 69 days, we closed under this 139 area, which was a range level, rejected. Sorry, that's actually just a standard fib hold level, rejected, and traveled on down to hit the 2 down there at 69, bouncing back up. Got an older range level that we're underneath at the moment, and we're still underneath that 95.234 break level. So yeah, from a higher time frame perspective, any close under 87.439 definitely can be seen as bearish, and any pump that comes from down here, we are pushing up from the wrong side of the range resistance. And if you look at the level up here that we closed under, it went to 148 from 139 before it absolutely tanked and just came down through everything. So if we close under this 87.439 level and we have a break level up there at 95, which based on a whole heap of other timeframes, it's a really high probability level to go do a retest on anyway. So if we close down here and push back up and hit that, we just got to be very conscious we're coming from the wrong side of the railway tracks. So, and then I think the next level is going to be hugely down from there. So yeah, in fact, it's basically a center zero type job. So it would have to find support on something, which is probably going to be down around this $20 or lower sort of area down here. So that's definitely looking pretty bearish for the longer term if we close down here. And good signs of intent if it goes back up over 87 in the next hour, 87.439. Okay. And the 23-day, you just, all you really want to see on here is a close over 83.276. And there's resistance, starting from 86, more confluence with resistance there at 89. And then, of course, you move into 94, et cetera, 95. So that's to the upside there. But most of these resistance levels are quite confluent across the various different timeframes. So, and back inside that 2022 range. And the next target level for that is about 64 from the looks of it. we haven't gone to hit that yet. So that's also starts from 89. So yeah, just be careful of 89 and be careful of a push through 89 that, you know, they can push through the thing for 20 days and then roll over and come back down on the 21st day, end up closing under it, and then just coming all the way down here to 64 again. So just watch out for that. Right, that's enough bearish stuff. Let's have a look at BTC, see if it's going to save the day. Okay, so looking at the lower time frame here, just 1 hour, it's definitely in a position where it could push the final candle up above. It probably a bit too late for it to do a hard close of those break levels. It's got 3 minutes really to push this candle above them and then have the next one hard close them. So never know. 3 minutes is 3 minutes. A lot can happen in 3 minutes in crypto. So if we close up over 68,486 in this candle in 2 minutes, then maybe we're off to a decent break. And if we don't, then the next one can close up there, but it's not a hard close really, and it comes down to what happens in the first bits of tomorrow as to whether it does hard close it. So the thing too, and the reason I say maybe BTC is going to save the day, is that if BTC has a breakout from here and the Sol BTC chart actually flips positive to Sol at the same time, then it might have the strength just to really push up through a lot of that resistance. It will eventually fail, you know, but at the end of the day, it could give a pretty decent rally if those two things happen at the same time. So that's where we're at with the 1 hour. What's the 4 hour up to? So the 4 hours still looks like it needs to get up to the range level. So we've been bouncing through this range. 68.5 would be the range level up here, based on the origin and the engulfment and the creation of a new origin. We've actually got another origin created. This is very bullish for our structure. Like if you had to just point out what bullish structure looks like, just take a mental snapshot of this. This is what it looks like. So, you know, you bounce off an origin, you fully engulf, you create a range, you bounce off a range level, you have a little rejection on the next one because that's normal. You do a downside engulfment, you wick down, the break level goes, nah, go get stuffed. It creates another origin, breaks the hold level, and just keeps traveling up. So on this time frame, it just seems almost madness if it doesn't end up at 69. Something's got to give. It can't just go there right now because it's got the trend, but the next candle could break the trend. Yeah, it depends on how high it closes and if it does close up, but definitely 68.5 is within reach on the 4 hour, whether it's either this candle having a decent momentum push up before the end of the day, or whether it's the next one goes and hits it. After that, though, that could be resistance, and then you just got to keep an eye on that. It could come back down here to test that 67 or either of these origins. But if you do get a dive into these origins, it wouldn't necessarily be a bad place to open a scalp and then see if it becomes something bigger over time. Okay, what's the daily look like? Daily is creating a new support origin down at 65. It's pushed back up through the trends. This is all looking pretty good. If it closes over that 68.398 on the daily, then it's pushing back up into the range. Only thing you want to watch is this this hold level up here at 68.7. If it can either close into that tomorrow or up above that tomorrow and reverse it, make it into more support. And then you've got your break level up there at 69.2. So there's a bit of confluence there between the 1 hour, 4 hour, and daily. That 69 might be resistance here. 69.2, which I think when we look at the higher time frame adds up, because 69.145 is a really big resistance level. But yeah, this is looking good so far. Close over 68.398 would be a good start, and anything higher has got some more bullish intention behind it. And 69.2, or like I say, when we look at the bigger stuff, I think it's 69.145. Very important level right now. Okay, see what we can see on the bigger stuff. Okay, so yeah, on the 51 day, we are hopefully pulling out of the hold level. So anything above 67.490 for daily close is going to be pulling out of the hold level. But there we go. There is that 69.145 level, which is a break level that price is currently under. And then we've got 72K above that one. So anything kind of pushing up into there could be resistance. We've also got some range levels going on in here. So let's have a look at these. So most of those are sort of 70K, 71K, 73, 75, 76. So they're all sort of a bit higher up. So if we manage to get back through the break levels, then 70, 71, 73, 75, and 76 become sort of the next areas of high time frame resistance that we are closing below today. And the next break level to the downside. So if we do reject off any of these break levels, including the 69 or the 72, the next break level to the downside there is 57.281. So could get a push up through all that and then a drop down. Okay, so look at the 17 day. Okay, and you've got a really big break level. Yeah, 69.145. So I think you're just going to find 69.145 is just all over the place, as in it's just common across so many different time frames. When something is that common, you just want to keep a pretty close eye on it. 72K as well, just again another break level. And then what do we have? We have an origin and a break, 57 and 56.5. So you could get a pretty decent bounce off that 56.5 level, which is also the last outstanding high probability short minimum obligation that we have. So yeah, there's support sitting where there is the completion target for the last large short we have. So yeah, all this stuff makes me think this is not the bottom. But could it be a bear market rally so that we take out some shorts and then get everyone excited? And once everyone believes that 60K is the bottom, it makes a lot of sense for them to go hit 56. Put it that way. So let's have a look at the 3-day. Yeah, so we're not getting an engulfment of the prior days. This is really just all consolidation in here. There's nothing really to show for this as far as being bullish or bearish. What do we got? We've got a broken origin that we haven't hit at 69.993. Actually, sorry, they're broken origins that have been revisited. 74,466. We haven't retested the break level up there, and there is just a world of resistance. And also we haven't done a retest of 76, 78. I mean, those retests don't have to come now, but certainly if we do go on some kind of bear market rally, then just don't be expecting too much higher than 74, 76, or 78. They're all just levels that are sitting there pending to be retested. Right. Learn my lesson from the last time. Let's just turn that on. And okay. Don't think we've got anything up here. Nope. All right, 69. What do we got? So rejected off the reverse hold, closing under the break level, closing inside the hold. This is a little bit on the bearish side. Hasn't retested. Yeah, so it hasn't done a proper retest of the first range that it broke out of, which means going back to 59,290. It didn't quite get to that. Also the level 3, so we're closing today almost exactly 50% below the 77,139 and the 58,553 levels. So it does make a lot of sense for it to travel between those two levels, whether it goes down first, then up, or up first, then down. Also still under break levels of 72.8 and 74.466. So same sort of high time frame confluence. But also it's not a proper engulfment here, but we are closing inside this blue candle here, which is about 70K. The body is sitting there at about 69.6. So, and if we put those two together and we put those two together, that break level is actually going to be the wick of some form of range engulfment at 72.8. So yeah, bit of a dodgy looking chart. Hasn't really retested the lower range. Hasn't actually quite gone to the 3, even though it's closing under the 2. And yeah, I would sort of not be surprised if this becomes kind of the next range, whether we go up to maybe as high as 77, push through all that, flip around, end up coming back down, something over the next couple of months. That's a really good example of when you close inside a hold level, stop trying to get your TP up here. So, if your entry was 96, once it hard closed inside it, revise your entry, bring it down, get out. It's also a good reason not to just take the lazy entry on high time frames, because you should look for something lower, particularly if there's lots of time to go on the candle, and then you could have actually got in down here at some sort of greedy area inside this if you'd refined it, and then when it closed inside the hold, instead of trying to take a moon boy close up at 109, you just go, oh well, I'm in profits anyway from a greedy entry. I'll just take 9.5 even, where you see, okay, it's closed a range level. I'll just take 9.5 and then, oh yeah, it gets back to 9.6. But that's yep. Lessons learned over time. Okay. And this is not too bad. It's sort of implying that we should see 72 to 73 as part of the 23-day structure. But if they want to flip bearish, you've got that break level there that they could reject off at 70k. So that's definitely an option. And it's back inside some really old, what is it? Oh, it's back inside a long hold there too. So it would be a little bit more bullish if it could maintain a slightly better close than this. So from the lower time frame perspective, you saw right at the beginning that 68.3, 68.4 on BTC was better from a low time frame perspective. So even when you're looking at things like the 23-day, you've got this hold level back here, which has held the price and kept it inside this entire range for quite a while until it broke out. And now that hold level could act as support now because it's been hard closed to the upside, but it's less likely to happen if we close under it. So yeah, any kind of close that gets it back up above that 68,338.7 today, then you could add that to being a little bit more bullish. So what are we at now? 67.994 with 45 minutes to go. So it's possible, but not guaranteed. Okay. Let's have a look. 3-day. For some reason, I feel like we've already looked at this. I think we have. But yeah, not much there on the 3-day worth looking at. It's just the bigger stuff is clearly in control at the moment. Right, let's have a look at Tesla and MicroStrategy and see what they look like. Well, hasn't this been the weirdest 3 days for Tesla? So the close isn't bad. It keeps opening down. Like 2 days in a row now, what it's done is it's opened under the range trends, but just above either a prior broken or a current trend, and then it's ended up bouncing back up because of those, and that's got it back into this sort of 409 to 420 bracket. So let's just see how the week close was, see whether it created that hold, because yeah, the weekly closes today as far as stock markets go. So the 7-day chart still shows 2 days to go on it, but shouldn't make any difference to actual price structure over the weekend. Even if everyone pumps the heck out of synthetics, it doesn't actually change anything. So it looks like it's going to create a hold level. If it opens on Monday inside that hold level, then it could be instant support. So any kind of open over 413.439 is going to be up inside the hold, and any kind of open under that is going to be down, and that can send it back down. But yeah, we've got this weekly origin down here at 394. So, and we've got the trend, first touch trend. There's pretty good reason for this to go to 394 next week and then bounce all the way back up. And if that happens, it could be a decent sign of reversal. And what we don't have, since creating this origin down here, we don't have an engulfed blue candle. And it would have been really bullish if it had engulfed that really big candle that you see from the week before last. But if this one stays blue and we hit the origin and then we come back up and we end up engulfing the week that we're just closing now, then we could end up creating a range off that. So that would be, just get rid of some of this older ranges. And Yeah, so we could create that and maybe push back up into the 450s, 430s from there. But it really just comes down to what happens next week. At this stage, it's still a downtrend, and it looks like we've got a hold. So we're probably going to come down, and then if we do hit, like I say, the trend in the origin down here at 395, it just comes as to how much of a pump we get off that. I mean, the pump should be minimum back into this hold, which is 413, but if it ends up blasting through it, 424, maybe it tries to close over 431 and then get some continuation. So let's see if we get something next week. At this stage, it's not lower than this, which is kind of what we're just from a real basic structural perspective. We just don't want to see lower than this. If you're going to create a reversal, you sort of want to go like that, which effectively means that this was the sweep of this, and then everything else therefore should stay higher than this. Okay, let's look at MicroStrategy. Oh, so we got the little engulfment, hit the origin. So same thing as Tesla really, but does it do it the other way? Does it open and engulf this candle on the daily? So any kind of open back under the trend. If it engulfs this candle, creates a range off that, it could go more into distribution, but it is a hard close of the range trend. It's got a hold level here at 127 now. Effectively, this is compressing, so it's going to have a breakout at some point. We've got a hold level here. We've stayed above all of our origin levels, so it's not. I wouldn't actually say this is looking totally bearish at the moment on the daily there. It's looking like it's got a good chance of breaking to the upside. And the weekly sort of backs that up. Looks like it can open over top of the trends. Don't have an engulfment. Yeah, it's might have to go down first. Maybe a week down to then bounce to come up. But it's yeah, it's looking like it's holding the horizontals and trying to cut through the trends. So it's not so bad. Price hasn't come down into the weekly hold on hype. So no trade yet. Just keep that alert there. If you get some shock market event and it dips down into this 25 to 22 area, then just be ready to go. Failing that, not really following it too much. Sol daily market cap. So that's definitely back up inside there. It hasn't hit that 48.64, just rejected off the backside of the trend. So still needs to kind of crack out of here. It's going to break downtrend today, so it should target the break level. It's just got to get above that. And it hasn't quite touched the body of the hold, so it's definitely looks like it needs to push up again. But this next candle that pushes up could run into both that range, well, quite a bit of stuff really. It could run into the range level, it could run into the next exterior trend, it could run into the backside of the support trend, and it could run into the break level. So, and of course it could run into that origin up there at 50 billion, 50.45. So pretty confident with the price chart. Just says it's Looks like it could push to the upside, but definitely got some resistance waiting for it. Yeah, and bigger stuff still not great because it looks like it hasn't quite completed some of what it should have completed. So, but, a lot can change in 1 month and 12 days. Right, that's us for today. So I should say like and subscribe because I haven't said like and subscribe for ages, and make sure you leave stuff in the comments and all that kind of stuff that gets the algo to push it. It's pretty quiet in crypto Twitter land at the moment, and yeah, it'd be good to get the algo pushing things around some more. But we'll catch you again on the next one.